Hello, everyone. I'm Ben, your daily trader,
And I'm Kagan, your other daily trader.
and today we're going to be talking about how to enter in case you missed your main POI using M1 continuations.
Great.
So, as you can see here, today we're going to be talking about why you're missing your entries on the main POI, but if so, how you can recover from that. Because a lot of you may not be able to grab your entry right away. It may tap and run your 15-minute POI. It may tap and run your 30-minute or hourly POI. And they're like, oh, I missed the trade. But I'm going to show you today how you could re-enter that trade in case you did miss that POI. And here's the basis of that structure. Now, if that's not enough information for you as well, and I'm also going to throw in this indicator over here, which looks like the liquidity inducement theorem entry helper. I actually had a friend replicate this indicator. So still credit to REM Forex and WWA communities for developing their version of it. From my understanding, all this is just a revamped TDI with the new settings on it. And these settings are actually different from what liquidity inducement theorem does. These are our personal settings and how we trade divergences in the market. And we're basically going to use these divergences for the continuations we see. Why pen?
Cool.
Why pay 10K when you come straight to my channel, learn it for free? Um,
Doesn't seem
anyways,
like too much of a contest for me.
exactly. Well, the reason people are asking me like, "Hey, man, why are you teaching this?" And I can tell people before I get into this video why I'm teaching this type of stuff. Now, to me, all this information has been known for the past 5 years. I've known how to do this before WWA or Lit were even a thing. Most of my information originally actually came from ICT. I studied a majority of his things, and then I also was in BTMM, as many people asked, what other courses or programs were I part of, and then the rest of it came down to my own findings, right? And I noticed they used this indicator and some of the blueprints from BTMM very similarly. And I'm like, wow, well, if it's not completely theirs, then I might as well teach it as well. But I'm sure there's other things I'm missing too. I'm sure Rem has his own unique spicing that I have no idea about. So I can't say that I know everything, but I do know quite a bit. And hopefully that answers a lot of questions that people have had.
So, on a broader sense, is it very can you do it a lot when you miss your 15-minute
So
POI and
I'm
have
going to show
M1
you guys
continuations?
numerous examples from the past 3 days per se, just to keep this video a little shorter than normal, right? And just show you guys that it is possible to catch trades even when you miss your main POI. Now let's go over the structure. Let's get into some of the understanding of what this concept is. So per se, let's say price is coming from a downtrend and or price is now coming into our main POI. Let's say that this POI right here is a 15-minute, 30-minute, or hourly POI, right? We need to see on the M1, this is just basic concepts in general. We need to see liquidity getting grabbed on the M1 consistently into this POI, right? We also need to see consistent breaks of structure post mitigation of this POI to understand that price has switched direction. Now, there are numerous variants that you can come across, and that's when it's up to you to kind of back test and see it for yourself, right? So here we are, price comes in, we grab liquidity once, we have a little break of structure, we grab liquidity one more time, and can this happen again? Yes, price can actually come back down, grab liquidity for a third time. Now, usually after the third liquidity grab, that is your highest probability coming out of this POI. Now that we've had our liquidity grabs and price makes a break of structure, what can we see? This imbalance, right? This momentum was extremely strong, right? It's important to identify the reaction we're having on the 15-minute, the 30-minute hourly POI that we have, or in other words, our high time frame POI. Seeing that we have a break of structure after we see imbalance is getting mitigated here, we need to see our extreme, right, also produce a break of structure here that then produces some liquidity buildup, right, as inducement to come mitigate right back into that extreme. Now, can you enter here? You can, but it is a little bit more risky, right? Trading is not just about identifying quality setups, but identifying whether or not how probable that setup might be, right? If you assume it to not be that probable, then why are you trading it? You should only be trading setups that you are comfortable with, right? If this doesn't fit your comfortability, then simply wait for that next break of structure, right? Price comes all the way back up, builds a little bit liquidity, and then taps that M1 continuation order flow, right? I would always wait for this order flow to establish.
Well, how far out can you bring in this order flow from? Can it be, 10 minutes away, 5 minutes?
In reality, it can almost happen time and price is a big thing. I would say in a shorter period of time, it is more likely to happen. For example, the quicker this reaction happens and the quicker this forms, the more likely it is to happen. Now, I know it's getting a little bit messy here, but as this gets further away from our POI and price starts entering premium prices rather than discounted prices, then your probability of the trade, yes, does go down. I mean, just think simply, the higher something is, if you're buying something higher in the trend, then simply not as probable as buying it lower within the trend, right? And that also defeats your RR, your risk to reward, and other things associated with trading. So now that we have an understanding of the base model of what I'm explaining here, I can now go into some live examples, right? Some things that you guys want to see for yourself. And I'm going to show you here that these past 3 days, this week, all had examples of these types of moves, right? Let's start off on the first day over here, right? And then I'll go back down. So this was yesterday, or in reality today. I live in the US, but for many others, this was today. For me, it was yesterday. And let's just go over something very, very simple here, right? And I'll explain a few other concepts as well to kind of piece it all together, right? So here is our Asian liquidity, right? And as we see here, Asian liquidity can act as inducement, right? In this case, it was acting as minor inducement, right? It acting as minor inducement actually caused the break and retest of this Asian box, which allowed price to sustain a run, right? It's now around 2:30, and I always tell people generally around this time, if price is hanging around this area around 2:30, 3 o'clock, this is generally where London is going to come in around what time? 3 to reverse price, right? So that is what has allowed me to grab this 15-minute POI here, right? Now let's get into the real sauce. Let's hop into the 1 minute. So let's say, for example, that you have missed your entries here, right? Here's price coming in, right? Here's that liquidity grab, right? We always need that liquidity grab coming into the market. Then what happens? Price comes up. We have a break of structure, right? Over here, again, we have our next liquidity grab. It is not until, and if you look back at the diagram, this break of structure here that we can start looking for M1 continuations, right? Simply put, I grabbed this extreme, right? That has done what? Swept liquidity, right? And because we've swept all that liquidity here, right? Price comes back down, mitigates, right? After this mitigation, what we need and what would have been better would have been a break of structure here. However, because price has clearly induced this POI right here, has clearly shown that buyers have entered the market here, the market needs to come back down and stop hunt all these traders out.
Does that inducement make it more valid?
Absolutely, because if price were to come up and just tap it right here, it's very likely that it would just run, right? Because that's just following normal structure based off of what we're seeing here on the 1 minute.
So realistically speaking, you're looking for that inducement for the big jump.
Absolutely. We always need inducement, right? That's exactly why I probably wouldn't have entered here. I didn't see anything inducing right here that would have made this more probable for me. Yes, we had liquidity build up here, right, which seemed to be the main thing, and we clearly swept into that POI. But time and price is a big thing for me. I want to see an inducement that's very close to my POI that is just getting swept, telling me that these people are getting stopped out of their positions, right, for price to rocket, right? And you could have simply, for your position, entered somewhere around here, right, as an instant entry for 2 pips, and we could have had our first target right here for a 1-to-9, almost a 1-to-10 risk reward ratio, right? Our goal is to make money as traders, right? We do not need to try and go for 1-to-20s, 1-to-30s. The first step is just trying to become consistent. Now, if you simply miss this trade too, just follow the order flow, right? Here's the order flow. Here we tap in again, price rockets. And what does it do? sweeps liquidity, heads the other direction, right? Here's that break of structure actually, and we come all the way back down to this order flow, and price starts to go again. Now, there are other factors here from algo trading and ping pong trading where I wouldn't have taken this move. I actually would have remained short. But that type of stuff, if you want to learn that, you got to go follow our Instagram and DM us. That is not something I really want to put on YouTube as of right now. Maybe in the future, sure. Let's go over another example. So you guys have plenty of information to work through, so you know that this isn't just something happening once a day. I want to show you guys that this happens literally every single day. All right, so this is very simple, right? What I did was I grabbed my POI right here, my 15-minute POI. You're probably wondering why. Price left a nice little imbalance here to tell me that if price does so happen to come into here, there's likely to be a reaction, right? So knowing this, let's hop into the 1 minute. Now again, let's say I missed this position, right? I'm like, oh crap, I missed my position in my main POI. That's perfectly fine. What do we have? We minorly induce the Asian highs, right? We have a break and retest, right, of those Asian highs. Our entry should have been right here, right? As soon as we had that break of structure from here, we should have entered here. But let's say we missed it, right? And then here, we finally break structure again, right? I see no clear inducement, right? But look, I come right back up and look at all this liquidity buildup. Remember I told you, look for those little bits of support that we see right along this area. Price comes right back in, taps, and runs, right? And you're going to see this every day. It's okay. Be patient, right? The trades will come to you if you're simply just patient. Are people teaching this for thousands of dollars? Absolutely. Do I need to? No, you can find this on YouTube on so many different pages. The things that I charge for are things that you're not going to find on YouTube. I'm okay with teaching things that are public, right? Things that are out there, things that are leaked. I'm not going to show you something that's unique to my own edge or personal. I'll charge for that, right? As I should. I worked my ass off for it. But at the same time, this is all public knowledge. So why not teach you? Another thing I missed out on all these entries. Hold on. I completely forgot. We have the entry helper right here to kind of show us how to grab these continuations in case we want extra confirmation. It's very simple. If you don't know how to read a divergence, all we have to do is identify. And I'm sorry for the messy graph. I generally am a very messy trader. My graphs are never as clean as other people's. However, that's not the main point of trading. Other people can have cleaner graphs than me, but I'll still make better trades. Anyways, here's a nice little divergence, right? How do I know this is a divergence? If we look at this right here, we can see that from this low, right? Here, let's come in here. From this low to this low over here, we can clearly see that there is a divergence in the market. When we are going down on the indicator while going up on price, that is confirmation to these buys. Now, it may not happen every time, because if I come back into history here, let's see if it happens. I'm not entirely sure, but I'll be able to tell you. From this low here to this low here does not look like we had a divergence. However, what I can tell you is from this low to this low here, we did have a divergence, which actually may give reason to this entry here if you decide to enter on this extreme here, right? And then if you missed that, you could have re-entered here based off of this inducement and liquidity buildup.
All about confluence.
Exactly. Now our final setup, just to go over this one more time for you guys to see. You can clearly see on the 15-minute that price in the Asia got mitigated during London. Okay, we might have missed that. We missed this entire move, right? But what did price do? And this is important to know. We do not always have to have a break of structure. We can simply have failed. This is called failed demand. Why is it failed? Because we've simply swept liquidity right here coming in to this POI. We had a nice reaction. So yeah, we probably would not have caught these sells, right? We're thinking, oh, maybe these might buy, right? Because we're hitting demand here. Well, understanding from the sell side perspective that this is failed demand, we can come right back in right, on the 1 minute, see right after we've reacted off this POI, we had a break of structure, right? We've come back up, right? And we've had another change of character here, which allowed me to draw out this, which then connected to this. And if you watch my video on order flow, you would know that you do not always have to have your stop loss right here, right? Because what's going to happen is so many people know how to use order flow these days. You want to keep it just above where it happened, where the order flow started, right? Because price is going to try and stop you out of these positions here. And that right there at minimum is already a 1 to 7. So guys, if you enjoyed this video, I really hope you guys found it resourceful. I really hope it helps your trading. That's my goal here, to make you a better trader and hopefully help you see things that you haven't seen before. But anyways, make sure to hit that like button. Please subscribe to this channel. It helps a ton. And if you want to get in contact with us, please DM us on Instagram. We're going to throw up the name on the screen here in a little bit for you to see. And yeah, come talk to us. And also next video, we got some big news. We got new things coming out that we want to share with you guys. Instagram has already seen it, but we know that YouTube hasn't yet, but stay tuned for that video coming out soon. With that being said, peace.